Hello, Sats fans. Welcome back to Swan Signal Live. I'm your guest host, Brady Swenson. If you've been watching the show for a while now, maybe way back when we started in March 2020, I know some of you watching probably have been around with us for about that long. I started the show and hosted it for a long time, and these are my favorite episodes. They're the quarterly recaps. We did them for a long time with Andy Edstrom and Preston Pish. And now I'm here to guest host the episode with Sam Callahan, our senior analyst, and Vijay Boyapati, a senior engineer here at Swan, also author of The Bullish Case for Bitcoin. So we're just going to riff on what's happened in the past quarter. It's been, as always, a very active and compelling 3 months in the history of Bitcoin. So lots to talk about. Before we dive in, I'd just like to thank Cloaked Wireless. Cloaked Wireless is a privacy-focused wireless service provider that can protect you against SIM swap attacks, whether it's to secure your primary phone or to have a secure privacy-focused backup phone. Everyone should protect themselves with Cloaked Wireless. It's a fantastic service. Also, remember Pacific Bitcoin Festival. This is going to be held this year, October 18th and 19th, in its third edition, I believe. Absolutely fun times hanging out with Bitcoiners. The vibes are super high. It's one of the best and most fun Bitcoin conferences out there, held in an old airport hangar at the Santa Monica Airport in California, just outside LA. Awesome venue, awesome place to hang out. You'll see some of your favorite Bitcoiners just wandering around in a smaller, more intimate style of a Bitcoin conference. So come hang out with us at the hangar. October 18th and 19th in LA, in Santa Monica, and we'd love to see you there. All right, let's dive back into the show. Welcome Sam Callahan today playing the guest, and CJ, no, not CJ, sorry, Vijay Boyapati. I've just been rewatching some West Wing, so I've got CJ stuck in my head. She's the press secretary in West Wing. So Vijay, welcome back, man. How are you both doing today?
Doing great. Great to see you guys again.
Yeah, doing good too.
It's gonna be good to hang out. So I guess we're just meant to dive in on the political side of the conversation, since I watch West Wing or rewatch it every presidential election cycle. It's just something I like to do. Love the show, love the writing, acting's great. Of course, it's all very idealistic, but it's good. And we've had some amazing just developments on the American political landscape as it relates to Bitcoin over the past few months. And I think we could talk a little bit about how Bitcoin's game theory, which plays itself out on many stages, and we can maybe talk about some of the others as well, but it's playing out right now on the American political stage as at the very highest levels in the presidential campaign. Donald Trump, over this past quarter, I think it was sometime in March, maybe April, came out and said that he supports Bitcoin and wants to be a pro-Bitcoin, pro-crypto president. He wants to ensure the right to mine Bitcoin in the United States, ensure the right to self-custody, he said during a campaign speech, and that's now been put into the Republican Party platform as well, the working to protect the right to self-custody digital assets, which is great. When we heard Trump mention Bitcoin and crypto for the first time on the campaign trail, the FIT 21 bill, which is a set of a framework for regulations around crypto and Bitcoin. So far, we've really just been working with guidance from the SEC and the CFTC to kind of figure out how these things fall legally into the financial world in America. And this FIT 21 bill is trying to provide some actual legislation to give a framework for the legal treatment of Bitcoin and crypto in the United States. Interestingly, the White House, they'll issue these sort of like takes on legislation and send them out to legislators as they're having these debates, just so they know where the White House stands. And there was a very critical statement issued about the FIT 21 bill, including in bold at the bottom, if this bill comes to the president's desk, it will be vetoed. Then Trump makes his statement, and the following week, the FIT 21 bill passes the House with strong bipartisan support. 71 Democrats joined a couple hundred Republican lawmakers to pass the bill in the House. Now it will go to the Senate. And the same week, the president's office reissued a statement about FIT 21 that was much more dovish and did not include the guarantee to veto the FIT21 bill. So you can see this game theory playing out. If one, competitor, one side, in this case, a presidential debate or presidential campaign embraces Bitcoin, then the competitor must do so as well. And that's the game theory playing out again on many different levels. So Vijay, give us your take on those developments on the American political landscape, and maybe if you want to kind of frame it up as well with some of the other, worlds, I guess you could say, where Bitcoin game theory plays out.
Yeah, I like to think of this from a higher level, and I've often said in the last couple of years that the biggest risk to Bitcoin is a nation state attack, and I would say whenever asked about this question that I think this question will be resolved in the next 5 years, that we will see whether Bitcoin gets enough adoption, that we have enough political capture from the political class, seeing that there's such a huge benefit to pass policies that are pro-Bitcoin. And I'm really excited because I think this has resolved this question much earlier than I thought it would have been resolved. This is an example of gradually then suddenly, where I think this question of political capture has now been answered, and it's been answered in the affirmative. We have political capture. Both political parties now have recognized that this is a critical demographic, and that the Republicans and Democrats are so evenly divided. It's such a small fraction of the population that actually decides the elections in the United States. I think something in the order of 4 or 5% of the population, and the fraction of the population that decides elections are generally fairly independent-minded people, and the kind of people you'd imagine who are open-minded about a new asset class like Bitcoin. And if just a small fraction of the population is a single issue demographic where that they're passionate about Bitcoin or digital assets, and they want to vote based on policies that will be friendly to that part of their portfolio, they could easily swing an election. It's quite conceivable that we now have enough owners of Bitcoin in the US that we could have a meaningful impact on the election. And I think the important part is this has now been recognized by the political class, and they're acting on it. And I think Donald Trump coming out very clearly as a pro-Bitcoin candidate has sent a signal to the rest of the political class that they can't ignore this issue anymore. So I think this is an incredibly important development that happened sooner than I thought it would. I thought this would happen maybe 3 or 4 years from now, when you had half of Congress as owners of Bitcoin, and we would have political capture then. But I think it's happened now.
Sam, what do you think?
Yeah, I agree. I agree with Vijay. I was surprised at how fast this happened. To go back to your point, Brady, I think you meant SAB 121. FIT 21 is the infrastructure bill, and I don't know why they're both 21. I think this.
Oh yeah, you're right. That's what I meant. My bad.
It's confusing. No, it's the SAB 121, but I think that was actually such a key point because it showed how politically driven some of these regulators are, because nobody expected, the SEC to come out and approve some of these Ethereum spot ETFs. And it was only after all this SAB 121 stuff happened, and after Trump came out pro crypto, pro Bitcoin, that you started to see total shifts at the regulator side. And, the SAB 121 was just a clear example of how the SEC basically has been ruling by these rules and guidance and guidelines. And, with the Chevron defense, this kind of went under the radar, but Chevron defense was overturned by the Supreme Court. And this is the kind of thing that's not going to be allowed anymore by these regulators. They're going to have to go through the judges and the courts to basically enforce any kind of rule instead of these unilateral guidances that get thrown down like SAB 121. And so I think in the future, we're going to really see this situation where, regulators are going to have to work by the legislation that guides them, and they're not going to be able to do anything unilaterally anymore. So in terms of pro Bitcoin, that's extremely positive. And so I think we're about to see a huge shift that's happening. Like Vijay said, I mean, this is a 50 million voters are on the line here for these candidates. And so it's very exciting in terms of what we're about to see in the future.
Yeah, so I went back and just double checked. I think it is the FIT21, the Financial Innovation and Technology for the 21st Century Act. The overwhelming bipartisan support, FIT21 represents an unprecedented joint effort to deliver critical consumer protections and foster innovation in the U.S. digital asset ecosystem. So yeah, there's just too many of these bill names to keep straight. But yes,
it's not 21. It's not 21 for 21 million Bitcoin.
It's the 21st century. I think that's just a happy accident. Right, exactly. Or maybe not. I don't know. We'll have to see who actually decided to name the bill, because I think that's pretty clever if it were intentional. Anyway, yeah, I think this is a great development. To have it happen earlier in this, kind of these election cycles than later, probably a presidential cycle earlier than we thought, as you were saying. And this is a good thing for Bitcoin. The Biden campaign did announce that they were going to accept crypto donations soon after Trump's statement as well. We haven't heard much from Elizabeth Warren and her anti-crypto army. So it's very interesting to see it play out. Of course, the Democrats have other larger concerns to worry about right now, but this is probably good for crypto and Bitcoin in the United States. And I'll just say, this is a kind of a similar tack that the United States took when the internet was sort of coming onto the scene, and how to regulate it, how to regulate commerce on it. There were actually energy concerns that were put out there, arguments against the internet, because it used so much energy. So that was similar to Bitcoin FUD as well. And there was also this idea of what are we going to do with commerce, right? E-commerce on the internet might destroy Main Street, was one of the arguments or pieces of FUD about the internet as well. And so there were regulations that were put together by the House and the Senate and the executive branch as well to embrace the internet. And now we have, the 5 or whatever largest companies in the world domiciled here in the United States, because we took a friendly approach to allow innovation to happen in the United States. So it's good to see that sort of route being taken toward Bitcoin here, and I think it's very promising.
Brady, can I make a quick comment on the political calculus here, and why it is so self-defeating to be anti-Bitcoin? I think this is a concept that Nassim Taleb has talked about the intolerant minority or intransigent minority, where you have a group of people who are very passionate about an issue, Bitcoiners, for instance, who can and will vote based on that one issue, but the rest of the population doesn't have a strong interest. The people who are not Bitcoiners don't really have a strong, point of view either way. So there isn't a natural demographic for someone like Elizabeth Warren. She's not pitching to someone who really cares. There isn't this large demographic of people who hate Bitcoin so passionately that they want to ban it. So it's really political suicide to go after groups like this, who are these intolerant minorities. It's like the idea that Taleb gives of, people who have peanut allergies not wanting peanuts on planes.
Right.
And because they are very passionate about this, the rest of the people don't care. Like peanuts or sandwiches, I don't care if you don't have peanuts. But for those people who care a lot about it, they can shift the policy because they have a big say in their, the people who are, trying to cater to them want them to be happy. And it's the same with Bitcoiners versus people who don't care about Bitcoin. So I really think the people like Elizabeth Warren who have chosen this as their issue are going to die on this hill, because there's no one there isn't anyone who's going to come to their support to provide them the votes they need to move where they want to.
Yeah. No, I agree completely in terms of I've never met somebody who hates Bitcoin as much as somebody who loves Bitcoin, right? And so these people going anti-Bitcoin, these politicians going anti-Bitcoin, they risk losing the votes, because if you attack Bitcoin and somebody loves it, you're dead to them. And a lot of people are don't attack Bitcoin. We find it the most important technology. One of the most important policy issues right now is whether our country embraces this technology or not. When we look at the debt problem, look at the deficit spending, look at the inflation problem, look at just the future of our country, the ability to save in terms of, spearheading economic growth. I mean, we really think this is the most important issue today. And so if you talk smack about it, we're not going to vote for you. Same can't be true if somebody goes against it,
Yeah, and it often supersedes other issues for people, and someone might naturally be aligned with Elizabeth Warren, but then feel very passionately about Bitcoin, and then just that she's lost that affiliation with them, even though they would otherwise be naturally aligned. I've seen people like this. I live in Seattle, in a very liberal city, and I've met Bitcoiners who are very liberal, who don't like Elizabeth Warren because she is attacking something that they have, a strong affinity for. So it is a way of politicians like losing a base of support, and eventually they'll figure this out, because they're, politicians are also rational in the long term. They figure out that they're not going to get voted in if they keep doing something that doesn't make sense to get those votes.
Yeah, we've seen a development just recently, yesterday, with the Republican National Committee coming out and put it on their policy platform to basically support Bitcoin, support self-custody, support Bitcoin mining, and also denounce CBDCs. That's pretty wild to see a major political party taking a stance like that and put it on their policy platform under the chapter of, I think, how to make the greatest economy and then how to champion innovation. It's pretty wild to see. I would have not expected that 4 years ago.
Yeah, in terms of that, this reminds me of one other comment I wanted to make about this. I don't want to linger on this too long, but there's political capture from the top and political capture from the bottom. And when you see a party platform like that, it's often staffers who are working for, congressmen or senators who get to slip in this language. They may not seem important, but they're the people who write the actual language. And there could be a Bitcoiner on the staff of someone who's writing the party platform for the Republican Party. And so you get bottom-up adoption, which helps with things like this, right? Writing a party platform. And then you have top-down political capture, which is someone like Donald Trump coming in and saying, hey, I can get a lot of votes, and this could actually swing the election in my favor. And then he has, the podium, and he can then spread the message of Bitcoin to the population at large. So I think both things are happening, the bottom-up effect and the top-down effect at the same time.
Yeah, I agree. And we can look at Greenpeace's campaign last year too as just another example of the intransigent minority and people that just don't really care if you're not part of that intransigent minority. It's just not an issue that rises to the top, 3 or 4 issues that they really care about and want to vote about. Greenpeace launched a very well-funded campaign against Bitcoin, slinging around a bunch of energy FUD. And it went absolutely nowhere online. I think the account ended up with like sub 100 followers. They could get no traction on any of their tweets, no traction in the press whatsoever. And all of the media, the social media and the press ended up being Bitcoiners, pushing back, and the success of Bitcoiners pushing back against the campaign and just completely turning it on its head and embracing this piece of art that they made to sort of represent the energy FUD and saying like, no, energy use is good with Bitcoin as a jumping off point, saying, no, it's actually good. This is a good thing that we're using so much energy, and here's why. And it was a great moment for us to explain that. Let's talk about that for a second. I think the energy FUD is kind of turning a corner a little bit. At least anecdotally, in my kind of end of things conversations I have about Bitcoin, more of those are happening again since price is starting to run up, and I'm talking to friends. And they're starting to understand more that Bitcoin is, energy usage is not on face a bad thing, right? There's something more to it. Then they're asking me about it. They're like, okay, well, I just had this understanding that was, 4 or 5, 6, 7 years ago when it was written about for so long, and that FUD really sort of became entrenched. And so it was one of the few things that people knew about Bitcoin. Like, you knew the word Bitcoin, and maybe one of the couple other things you knew about it was, okay, it was a digital money. And then 2, it uses tons of energy, which is bad. And now people are coming to me and asking like, okay, tell me more about why Bitcoin uses energy. And then I get to talk about how, Bitcoin mining is one of the most renewable industries on the planet, right? Or at least one of the most sustainable. It helps create more sustainable energy grids. It's capturing, wasted and stranded energy at the edge of the grids. It's actually incentivizing the creation of renewable energy by providing, like builders of that kind of infrastructure, a resource, a revenue stream, like early on, as they're kind of overbuilding maybe that energy resource for the future, right? And they can actually monetize some of the construction of these renewable energy sources before they're actually, completely used, since it's being overbuilt. And we've seen a couple of examples of that, Hydro Dam in Africa, for instance. So we're seeing this kind of shift. The nuance that we've been trying to talk about is really seeming to catch on with journalists, at least starting to, and with anecdotally, like I said, people I'm talking to about it. Have you guys sensed any shift in the understanding of why and how Bitcoin uses energy and what the consequences of that might be?
I'll let you go, Sam.
No, yeah, I mean, absolutely. I feel like we've seen it basically around the world, really. It's not just in the United States. You're seeing a lot of partnerships happening in specifically the Middle East and in countries that they have excess energy, like Paraguay, for instance. They have excess hydroelectric. They're getting Bitcoin miners in. You got Oman striking the deal. You got UAE striking a deal with Marathon. These things are happening all over the world because people are just realizing that Bitcoin mining specifically is a technology that has benefits to the energy industry. And a lot of these countries really do have excess energy. In fact, the United States, I just saw a chart yesterday. For the first time in 60 years, the United States is producing more energy than it's consuming. And so it's not just happening globally. And the beauty of Bitcoin mining is that really are like buyers of last resort for energy. They will be this like the dung beetle of the energy industry, just eating up whatever is not used by everyone else. And that makes the whole energy industry more efficient and more economical. And so it's actually a really good thing to have Bitcoin mining around because of its flexibility, because it can go to the location of the energy resources. And it really likes that really cheap energy that's typically wasted. And so all these things are positive, and I think the facts have always been on our side. There's been tons of misinformation around it, around all these narratives around, it uses as much energy as whatever country, and you're starting to realize that the data supports it, that it is a useful technology for the energy industry, and the smart countries are starting to adopt it. And so I think it's extremely bullish. I think it just took time to educate, and we're finally starting to like push through and break through some of those old FUD narratives that we've had to battle for years and years now.
Yeah, absolutely. Vijay, any comment there?
Yeah, I think this is part of a wider trend of businesses and services that unlock economic value that had otherwise been underutilized or stranded. And I'll give you two examples that everyone's familiar with. One is Uber and one is Airbnb. You can think of these economic resources, cars that weren't being used, or houses or bedrooms, beds that were not being used, and these services unlock these resources. Bitcoin mining is similar in a way that, and actually much more important, because the energy industry is perhaps one of, if not the most important industry. The whole foundation of society and civilization is based on our energy usage. So to be able to unlock these stranded resources and to make the energy grid much more resilient is a very important benefit to the economy. And I like what Sam said. The argument is ultimately on our side, and I think facts will eventually prevail in this. I haven't seen this narrative being pushed very hard for the last year or so. So I feel like we've gotten over the hump. Part of that is, I think, BlackRock adopting a Bitcoin and launching their Bitcoin ETF product, and them being one of the biggest purveyors of ESG products. I think the fact that they were willing to accept Bitcoin was a big signal that, hey, these guys would not have accepted Bitcoin if there was actually a strong, legitimate reason that it was harmful to the environment. I think that narrative is essentially dead, because if anyone actually looks into the question, they realize that Bitcoin is perhaps the greatest innovation for renewable energy sources that was ever created. There are going to be all kinds of renewable energy sources around the world which will now be unlocked because there's an economic incentive to unlock them. And then that allows us to, essentially colonize places around the earth that people wouldn't normally want to live in, because you have energy, and then you can monetize that energy, and then you can start building out infrastructure and communities. And I think it's a really fantastic innovation if you care about renewable energy.
Yeah, it absolutely is. And it's just being able to destroy that FUD, I think, is a huge thing, especially on the, more liberal left Democrat voting side of the political equation. It's really important there. And so I think spreading that message is important. There's a movie called Dirty Coin that's going to premiere at Bitcoin 2024 in Nashville here in a couple of weeks that I'm excited to watch. We're working on a video with Daniel Batten, who's been leading kind of an energy education charge on Twitter and his own writings. So looking at that, looking forward to that as well. I think it's a really important issue. Next up, I'd like to talk about Peter Thiel. A couple weeks ago, I think it was, he made a statement about Bitcoin. He said two interesting things. One, that he doesn't think the price will go up dramatically from here. And two, that the ETFs have sort of resulted in a sort of giving up of the original mission of Bitcoin, which was a decentralized money, and that this is sort of the canary in the coal mine of the centralization of Bitcoin. I know we hit on this in our last episode as well, but it is important, and it's a topic that continues to come up in the mainstream. And Peter Thiel is a longtime holder of Bitcoin, and so I think it's important to address those ideas. So we can let's save the price conversation maybe for after this and just focus on. Vijay, we'll start with you. What do you think the potential impacts of these ETFs and the accumulation of a bunch of Bitcoin under their custody to basically break Bitcoin's mission of a decentralized money, promise of a decentralized money?
When I heard Peter Thiel, what the sort of sentiment that rang out to me was unrequited love. That he was too late to the party, and it's kind of painful. It always feels that way when you buy Bitcoin and you've had, friend. He certainly had a lot of libertarian friends who bought Bitcoin a lot earlier than him, and perhaps he's right. Perhaps when he talks about there's not much upside or not as much upside, yeah, that's probably true. Like there's probably not a 10,000x in Bitcoin now, but given the risk profile, 100x is an incredible return on something that I think has been enormously de-risked over the last, decade. Bitcoin now is, I think one of the least risky assets, especially given the political capture that we've talked about now. I think the main threat to Bitcoin is essentially gone. In terms of the ETFs, I think the problem here is Peter Thiel's history and his view of money as a medium of exchange. And this topic comes up periodically, and it certainly came up in the block size wars. We had a number of people who believed that Bitcoin was first and foremost meant to be a medium of exchange or a payment rail, and they sort of saw it as a decentralized PayPal. And of course, Peter Thiel, as one of the founders of PayPal, I think has that view as well.
Yeah.
When you think of Bitcoin or money in general, I view that money begins as a store of value and eventually transforms into a medium of exchange, because you need it to be widely held and owned before it's suitable as a medium of exchange. Because why is that the case? You have this opportunity cost. If you start using something in exchange before it's fully held as savings, you're losing the upside of holding it as savings. And, we all know the stories of the pizza that was bought for 10,000, or two pizzas that were bought for 10,000 Bitcoins. Most people who've had any history with Bitcoin learn that lesson, and they realize they should be using it as savings first and foremost. And I think that matches how money evolves in general, and that was true for gold as well. So if you view Bitcoin as digital gold, it's at the stage of becoming a store of value, a deeply entrenched store of value, then I think the creation of these ETFs and more people using it as savings makes complete sense to me. And I think it's a natural part of the financialization of Bitcoin. I do think there is a legitimate concern about the centralization of custody. I do worry about that a little bit, but we shouldn't get too far ahead of ourselves, because we're talking about a few percent of the total supply of Bitcoin being held in these ETFs. If it was 20 or 30% being held in the ETFs, yeah, we should start questioning that, especially because the majority of these ETFs are all custodying their Bitcoin with a single custodian, which is Coinbase. The way to solve this, though, I think, is to have more innovation in the custody space, and Swan's definitely working on that, and to push for friendlier regulations so that it is possible to have much more decentralized custody of Bitcoin. And one of those things is allowing banks to custody Bitcoin. And this is, one of the things that came up in the regulation that Biden threatened to veto, is giving the banks the ability to custody Bitcoin. That's what I think we should be fighting for. And I see here the fundamental problem with Thiel's perspective is that he's just viewing money incorrectly. And when you have the view that money is primarily a medium of exchange, and you don't see Bitcoin acting as a medium of exchange, and you see people using it as savings, and then savings products coming out like BlackRock's product, you kind of lose this cypherpunk ideal. And I think, unfortunately, it's a false ideal. It's an ideal that's not based on economic theory or economic history. It's just a kind of image that was created. Then you could be disappointed, and it makes sense he would be disappointed if he believed in that ideal and thought that that's how money evolved.
Yeah. So, any thoughts there? And then I have a follow-up for you, Vijay.
Yeah, I mean, I just think the centralization risks are a little overblown. I think if they approved the ETFs a lot early on, it might be a bigger concern. But at this point, the beauty of proof of work is that no matter how powerful an entity is or how wealthy a person is or how much Bitcoin they have, they can't control the protocol, right? And so I'm really not concerned from a protocol level about the centralization.
Did Sam's mic cut out?
Do you got me now?
Yeah, we got you.
Yeah, but there is custody risk because it is mostly Coinbase. And so if you own the ETF, you take on that risk. It's convenient, but you have risk there. There's security risk, there's counterparty risk. Now with Peter Thiel, I think he understands this about proof of work. I kind of think he's playing 4D chess. And if you listen closely, he did say, I wish I had more. And in Bitcoin 2022, he went up on stage. He did say BlackRock was the enemy, but then he said, I think Bitcoin's going to go 10x from here, 100x from here. He was pumping up the crowd. And now we know that his fund was selling at the exact same time. And so right now I'm thinking the same thing, that he's actually trying to get in at a lower entry price.
He's accumulating.
He's trying to FUD. And I think he understands this nuance of like, oh, it doesn't really matter that there's, all these ETFs hold it. And I think he's just trying to buy more. Honestly, I think he showed what he did last time at Bitcoin 2022. We know his fund was selling after he was telling everyone it was going to 100x, and Bitcoin was at 43,000 when he was doing that. So it then went through a bear market. And so I think the same thing's happening right now. I think he's trying to dump the price, and then he knows that there's a lot of upside potential here. And when he says the ETF is already priced in, that's nonsense. It's nonsense because 80% of the flows have been retail investors in this first wave of ETF buying. All the institutional money is not there yet. They haven't done the due diligence. All the financial advisors, all the other investment firms, pension funds, we've only seen the tip of the iceberg in terms of the big institutional money into these ETFs. So to say that that's already like done is also, it's just a silly statement.
I'm going to save that follow up because it's kind of off topic, and because we've switched into price a little bit here. So Vijay, we ran up to all time highs a little bit, broke it through a little bit by a few $1,000s. We're now down back into the 50s. 58K gang is celebrating again on Twitter, or maybe not celebrating, commiserating. Because now 58K is not exciting. This is the psychology of price movements. So where do you think we are in the cycle? Are you concerned at all? Have you become bearish? You still bullish as ever?
I say this honestly, I have never been more bullish about Bitcoin than I am today. And I do, that's not to say that I'm a perma bull and I don't recognize that there are going to be bear markets. And there have been periods when I actually thought Bitcoin would drop and get into a bear market when the Fed started increasing interest rates. I honestly believe that we were going to enter a bear market. But just in terms of the main risks to Bitcoin, which have been eliminated, I don't think people fully understand the enormity of the political capture of Bitcoin. They don't understand the enormity of the ETF approval and the regulatory acceptance of Bitcoin into the financial system. These are huge, huge developments. And Sam made a great point. This is really the tip of the iceberg with the ETF approvals. If you look at, I like to go back and look at the gold ETF. The flows that came into gold lasted many, many years, consistent inflows into the ETF. And gold went through, I think it was like a 7-year bull market, and fairly consistent. That there were some drops along the way. And I think that's certainly possible for Bitcoin. I think the ETFs could have changed the landscape where we sort of see a slow drift up. We've dropped from the all-time highs because there are some sort of temporary factors that have come into play, like the Mt. Gox bankruptcy. Finally, after a decade, I remember being around and being a Bitcoiner when Mt. Gox.
Do you have any
No,
coins?
thankfully, I never used Gox. I had friends who used Gox, and I know certainly people who had coins stuck on Gox, and it was incredibly painful. And thankfully, some of them are getting some of their coins back a decade later.
Yeah.
But what you have is this overhang of supply in the short term that comes from those distributions and the German government selling something like 50,000 Bitcoins. And when you think about these events, these are really events from the past. Finally getting, we're checking these offers risks to Bitcoin's price, at least in the short term. But once they're gone, they're not going to come back, because you're not going to have, it's very unlikely that you're going to have an exchange custodying 800,000 Bitcoins that's run as incompetently as Mt. Gox was run. I mean, there's malfeasance and potential criminality there. That's not going to happen. Coinbase has a lot of Bitcoin, but Coinbase is a public company, and very likely the employees don't want to go to jail, and the caliber of employees is also much higher. Also, the size of these seizures, government seizures, is going to be much, much smaller. You're not going to have a drug market like Silk Road, which has hundreds of thousands of Bitcoin, because the value of Bitcoin has gone up. So the potential damage from events like this is really limited to, these kind of anomalies that have happened in the past and they're coming up now. But once we're past them, I mean, there is really no major overhang as far as I can see. And that certainly makes me very bullish for this cycle once we get past the Gox event, and I think the German the sale of the Bitcoins from the German seizure is almost done. I think they've gotten through three quarters of it, so that's going to be gone. And it's not even clear, going back to the Gox distribution, it's not even clear that people who get those Bitcoins will want to sell them. Right. Yeah. And that could be a huge catalyst to the market if it becomes clear that those Bitcoins aren't getting dumped on the market. You have to remember, these people who are getting these Bitcoins have been forced to hold them for 10 years. For many of them, they benefited massively from the fact that they had their hands tied behind their backs and they weren't allowed to sell. Because sometimes when it comes to Bitcoin, we are our own worst enemy. We think we can time the market. We think we can trade in and out, and lots of people who did a lot of Bitcoin trading and ended up with way fewer Bitcoins than they otherwise would have had. So they've been forced into a lesson, which is hodl your Bitcoin as long as you possibly can. It could be the case that these Bitcoins are distributed and just go straight into cold storage.
Right. Yeah. Sam, I know you've been tracking this stuff. How did Germany end up with 50,000 Bitcoins? And
they
recent price?
Well, Germany got it from, there was like some movie piracy site and they seized it. But I think it's going to be it's akin to back in the day, somebody selling glass beads or selling their gold for like glass beads, right? It's such a silly thing to sell their Bitcoin, but it's their choice. I think they're going to pay for it for a long time. But I think what Vijay was kind of mentioning or alluding to is that it's a one-time event. It's a one-time sell event. Once it's sold, can't be sold again. That risk is removed from the market. And I personally, I just think it's important to understand that this is par for the course in bull markets. Charles Edwards put out a great chart the other day. He was looking at how many days have passed since Bitcoin experienced a greater than 25% correction. And this was by far a record of 427 days. And the previous record was in 2012 of like 63 days. And so honestly, the last 18 months or so have been incredible for Bitcoin in terms of the lack of corrections. And so it's very, very par for the course. And I think we have to be careful to understand that there are institutions in this market now, and they like manipulate sentiment. And right now they have turned that fear and greed sentiment all the way to fear by all these narratives: Mt. Gox, miners selling, Germany selling, long-term traders are selling. And there's just this combination that fits together. And you have to ask, why would they want sentiment to shift like that? And I think they are trying to get down in lower price, lower cost basis, because they know that there's a lot more to go in this bull cycle. We talked about all these other positive developments, these long-term positive developments. And if you just zoom out, I mean, things are looking really good in terms of Bitcoin's adoption, all these trends that are going up, the infrastructure being built out, the regulatory clarity. And so I'm not really buying it. And the Mt. Gox stuff is completely nonsense to me. I mean, honestly, we haven't even had confirmation from any of the largest creditors. Some of these companies that have been buying up the claims, we haven't heard from them that they've received the Bitcoin. We haven't heard from the ones distributing it, Kraken or BitGo, that they've actually received the Bitcoin to be distributed. And then, as Vijay said, like, if these people wanted to sell, they could have sold their claims for 10 years to the willing buyers. There's a lot of people willing to take the bet to buy the bankruptcy claims off these people. So if they had let his hands, they would have done it a long time ago. And so the people who are about to get this Bitcoin, I think they've proven that they can hold through this long-term, this volatility, and they have long-term conviction because they could have sold their bankruptcy claims if they wanted to. And as Vijay also mentioned, the cost basis, I mean, the tax consequences to sell at this point, I mean, it's substantial. A lot of these people bought Bitcoin at less than $700. And so I really think the Mt. Gox stuff is really over exaggerated. I think the Germany selling is a drop in the bucket when it comes down to it. I think this recent drop had a lot of liquidations involved and leverage. There was over 200 million wiped out in one day on July 4th. And, you know, that's for the bull market to continue to clear out that leverage and get that floor going and then build back up. And I see somebody ask, what will the creditors do though, Sam? There's two creditors for basically these Mt. Gox claims, and it's Fortress and Off the Chain Capital, who have been able to buy up about 15 to 20% of these claims. And they, from conversations, like Alex Thorne's talked to some of these LPs, and they are like Bitcoiners. You know, they might sell a little bit, but they have to find some kind of investment that's going to outperform the benchmark, which is Bitcoin, to sell out of their Bitcoin. And you know, what is that? That's usually like a Bitcoin company or some kind of creative discount arbitrage with other Bitcoin products. Like, you know, the GBTC discount would be an example back in the day, or these claims themselves were an example of an arbitrage opportunity that they outperformed Bitcoin, because these firms have done really well. You know, they basically bet on Gox eventually distributing them, and they bought these claims at a big discount. And if they do get the Bitcoin, that's going to be a nice arbitrage for them that they bet on for the last 4 or 5 years. And so I don't think that these firms are going to really sell. And I don't think the other 80% of the claims, like Vijay just mentioned, I don't think they're going to sell either. I think only a percentage are going to sell. What percentage that is, I don't know. It could be 20%, could be 30%. You know, nobody really knows. But it's not 100%. It's not what you hear. 2 billion or whatever it is, that number that always gets shouted on the headlines. And so that shows that there's misinformation, that shows that there's asymmetry of information, and usually that's an opportunity to buy Bitcoin at a discount during these dips if the information isn't right.
Can we talk about the other side of the coin briefly, Brady? Are we talking about the potential price risk here of the Mt. Gox distributions and potential sales? Just to sort of as context for what I think the other side of the coin is, when someone becomes a Bitcoiner, I feel like they become mentally captured. They recognize that Bitcoin is, you know, the best asset over the, you know, last decade, and it's hard not to pay attention to it. It's hard not to pay attention to the price. So on the one hand, we have the forced hodl of Mt. Gox, and then let's look at another bankruptcy, FTX, a decade later, where they were forced soddled, where they were forced their assets, the estate ridiculously sold its assets to dollars and is distributing dollars back to creditors. Imagine you're a Bitcoiner who deposited Bitcoins on Mt. Gox, and the estate sold their Bitcoins, which they didn't have to do. There are other bankruptcies like the Genesis bankruptcy where they kept their Bitcoin. FTX in the fairly near term, I would say within a year, is going to distribute $16 billion. And these are users of FTX who are Bitcoiners. A lot of them are Bitcoiners, and a lot of them are early adopters of Bitcoin. And imagine that you had that Bitcoin exposure and that it was stripped from you by force through a bankruptcy process, and you get dollars back. What do you think you're going to do with those dollars? You want your exposure back. You get a big chunk of your savings back. You want that exposure back. I think it's much more likely that we see a lot of buying pressure from FTX than we see a lot of selling pressure from Mt. Gox. So if you were to weigh the two things against each other, I think we're going to have a very powerful bullish catalyst coming up. We don't know exactly when, but that $16 billion is eventually going to be distributed to FTX creditors.
So we've talked, I think last time we talked about the cycle and how it might be different this time in terms of the percentage drops when we see these corrections throughout the bull cycle corrections. So this one was roughly, call it 10% ish, maybe 12%. We've seen in previous cycles much more volatility to the downside during a bull market, sometimes 30, 40% drops in price, which are, very scary during the midst of a bull market, but then rallies right back up to new all-time highs. The biggest one that I can remember in 2017 was something to do, I think it was a China ban or something, another China ban FUD narrative. Maybe it was the mining ban. I can't remember when that was. I think it was just a Bitcoin ban in general. And we had a 30 or 40% drop. And there were several of those on the way up in 2017. So far, we've seen some 10% or less corrections. Do you think because of that constant bid pressure coming in from the ETFs, or at least, those on-ramps much wider now because of the ETFs, do you think, and institutions coming in and being willing to DCA over long periods of time with a long-term plan, and not these kind of short-term traders or people who might be coming in to hold for the long term, at least that's their intention, and they get scared by a 20, 30, 40% drop and sell. Do you think that we might see relatively muted drops during the bull cycle over the next 18 months, assuming that does happen?
Is that question for me, Brady?
Yeah, either one of you can jump in. Yeah, and then we'll go to the other one.
I think, I think we will still have volatility. We haven't seen it now. I think one comment you made reminds me that the thing that I find most interesting about the ETF approvals is that we're now going to have price insensitive buying. We're going to have ETFs that are approved where they say, we need some fraction of our portfolio in Bitcoin, and that will have an effect of dampening price because they have, say, 5% of a large fund, maybe a few $1 billion in various assets, and 5% is in Bitcoin. If Bitcoin goes up a lot and goes to 10%, they're going to rebalance and sell that down. If Bitcoin goes down and it gets down to, say, 2% of their portfolio, they're going to have to buy it up. And so this has the effect of putting the brakes on as Bitcoin goes up and slamming on the accelerator when Bitcoin goes down. And the larger these funds become, the more this effect will take place. I do think, however, those funds are not significant enough to have a big impact. And I think in this cycle, human nature will still play out. I think if Bitcoin continues to drift up, as I think it will, more and more people will see it drift up. More and more people will become interested in it as a form of savings. They will pile in, and eventually you get the kind of madness of crowds phenomena at the end of the bull market. I still think we'll see that. I still think we'll see a blow off top. I still think we're going to see a crash when that happens, whether it's in 2025, 26. I can't tell you, but I still think human nature and these hype cycles are part of a fundamental part of the monetization of Bitcoin. And I look at gold. Gold's a bigger asset. Gold had hype cycles, and I think it's just a normal part of monetization.
Yeah, Sam, what do you think about volatility to the downside, maybe being muted this time around?
Yeah, I think in the short term, I expect it to continue to be volatile. I think that's just a function of the inelastic supply and the demand and leverage and all those things. I do think the more products that come about and the more popular they become, like these ETFs, futures, that adds liquidity. And so, volatility in a lot of ways is a function of liquidity. So as more liquidity enters the market, I do expect liquidity or the volatility to dampen over a long period of time. And as I mentioned before, like a lot of these institutions aren't here yet. These ones that are rebalancing, there's only been a couple of funds that have, like, as Vijay mentioned, has added passive pressures to Bitcoin's price. I think BlackRock's global allocation one just went live. And that's a huge fund. I mean, that's a big deal. And then Fidelity has a couple too. And I think that's when you're going to see game theory there as well, as Bitcoin supercharges those funds and it outperforms their competitors, similar funds from their competitors. I think, that's going to stand out. And then these other funds are going to be like, oh man, maybe we got to, add 0.1%, and that's how you get this going. And so I do think over time, these financialization will actually reduce the volatility. Like maybe we don't see like the 80%, but I think right now it's still fair game. I mean, 25% is par for the course. Like I said, somebody asked again, like, is this the same length of sideways action? Actually, no. I mean, Vijay, I remember you did a great job last time saying like there's consolidations usually around previous all-time highs, and then there's a lot of leverage that's wiped out, and then eventually you break through and there's price discovery. I still think we're in that consolidation phase right now, and it's actually the longest we've ever been at the previous all-time high. We're at like 4 months or 3 months. In 2020, it was very short. It was like 21 days. In I think the previous cycle before that, 2017, it was like, I think 4 to 6 weeks, if I'm correct, if I remember that correctly. So we're actually like really long hanging out in the previous all-time high, consolidating. And I think this is a function of these products that have come out, these ETFs. I think we have some major players in the game or trying to get in the game, like the Peter Thiels trying to get their shaken out, but I think they have to understand what they own. And like Vijay said before, I think Bitcoin's one of the least risky assets you could own right now. When you look out at some of these long-term structural issues, debt and the spending, I think people are starting to wake up to this fact. And so it's not something that you'd want to sell. It's always been something that you want to hold for a really long time, and benefit from its price appreciation as Bitcoin's adoption continues. And all trends point to that continuing and actually increasing exponentially, I would say, over the next 4 to 6 years, I would say, with all these developments happening.
Bitcoin is made for uncertainty, and we are certainly entering increasingly uncertain times on all levels across the way this world functions, finance, governance, etc. So buy, hold. This is turning in, I think, more in my mind, to less of an investment and more of security for me and my family. And I've always obviously been exposed to both narratives, but now that things are getting a little bit more uncertain to me, I'm personally thinking about it more as a hedge against uncertainty in my mind. So in that sense, both senses, it's a long-term thing. So accumulate, hold for the long term, and Bitcoin will do well by you in either one of those kind of investment cases or theses. So something I wanted to talk about that came up earlier when we were talking, Vijay, is the branding of Bitcoin. You were talking about how the cypherpunks kind of had this ideal of private money, private digital money, right? And very important cause, especially with CBDCs on the horizon, very actually a reality in many cases. And so Bitcoin was put out into the world by Satoshi, and let's just call it branding. That's what I do. So I'd like to think about it like that. Satoshi chose to brand Bitcoin as a peer-to-peer eCash system, right? And that type of technology had been talked about by the cypherpunks for decades. Alternatively, Nick Szabo proposed an idea called BitGold, which was more branded on the side of savings, the savings technology. So I'm curious, if you're Satoshi, just speculating, why do you decide to present Bitcoin to the world as a peer-to-peer cash system and not necessarily as a fixed monetary asset that is, a much better technology for savings than fiat money?
I think there's kind of a misconception that the word cash means medium of exchange necessarily. If you look at the history of the word, the etymology of the word, it has French origin and essentially means a box for keeping something valuable.
Like a cash, like a CHE.
Yeah.
Yeah, cash.
Right. And I think the part that I think is important about cash that applies to Bitcoin isn't necessarily the idea that is something you want to go to the grocery store and buy bread with. Eventually that'll happen, but the the part that's important about the word cash is that it's a bearer instrument. It's valuable in and of itself. It's not a credit instrument. It's not a reference to something else. It's not backed by something else. It is the thing itself that is valuable. And when we think of cash, like physical dollars, that's also a bearer instrument. It's something that when you have the value in your hand, whereas a check or a credit card, these are credit instruments, right? These are things that you have to trust. So I don't see this as an attack on my viewpoint as Bitcoin as a form of savings first. I just read that differently, and I look at the etymology of the word cash, and I look at what is the important attribute of cash, that it's a bearer instrument. And I actually see it as confirmation of my view of Bitcoin as first and foremost a means of savings, and then later on as a medium of exchange and something that you use in daily commerce.
Right. Yeah, I love that idea, and I've used that as well. That it's peer-to-peer cash system, a place to put your value, to literally cash your value. So yeah, that's interesting, and I think Bitcoin's different sort of brands over the years it serves it well during that period of time, right? So early on, it's not necessarily a store of value. It's not a great store of value yet. It is in that curious collectible stage, and maybe more suited to trading back and forth because it doesn't have a ton of value yet. Now that we're in the store of value phase, maybe it's the CACHE phase of Bitcoin, and maybe we'll go back to more the way people traditionally or commonly understand cash now, which is usually, I would say, predominantly people would understand it as like a form of exchange. So anyway, glad to get your take on that. I think we've reached the end of the show. Sam has had some connection issues, so we'll go ahead and wrap it up right on time anyway. Thanks for joining, Vijay. Appreciate you, man.
It's great seeing you again, Brady.
As always. All right, thanks for joining us on Swan Signal Live. We do this every week, so join us again next week. We also have several other shows on the Swan YouTube channel and the Swan Twitter account, which is at Swan on Twitter. On YouTube, we do a daily show called the Bitcoin Daily Show, which is an excellent, 8 or so minutes just discussion of the day's news and topics that are current and interesting. It's presented in a fun format. I love that show. Absolutely love it. We do Cafe Bitcoin every morning on Twitter. It's a drive time radio in the morning for Bitcoin discussion. We've got a great panel and great conversations that happen on Cafe Bitcoin. We also do Welcome to Bitcoin on Tuesday nights US time and Thursday afternoons. So we'll be doing one tonight with myself and Stefan Livera, and it's just a Q&A format. Come up on stage on Twitter Spaces, ask a question, or give us a topic. We'll riff on it. It's a lot of fun. So we create a bunch of content for you all. Our goal here, of course, is to educate people about Bitcoin, to foster adoption and bring about our bright Bitcoin future. Remember Pacific Bitcoin at pacificbitcoin.com. I would love to see you there. If you are coming or decide to come, please come find me. I would love to have a chat and meet you. It's at pacificbitcoin.com, October 18th and 19th. And with that, we'll sign off. Take care, SAS fans.